Will Palantir continue its ascent to the moon, or will it all come crashing down? I'm going to give you my full DC valuation of Palantir in this video to find out. Now we're going deep on this one. I'm Brian, the Finance Ninja. First, I'll go over Palantir's business, the positives and the negatives. Then I'll go over their financials, then the valuation and my price target. Now this is basically my welcome to Palantir video. Now I like to do a full company breakdown as my sort of introduction video to a company. Now I haven't done a full Palantir video since I restarted the channel. Let's go. Before we begin, shout outs to like and subscribe. Now Palantir stock is trading at $24.18. Market cap $53.5 billion. Palantir's CEO is Alex Karp, who's also one of the co-founders of the company. He has a bachelor's degree from Haverford College, a JD from Stanford University, and a PhD in neoclassical social theory from Goethe University, Frankfurt. Now he is a billionaire businessman and a wellness fanatic who practices meditation and martial arts. He has described himself as a socialist and a progressive, and has defended Palantir's work with the US government and military. I gotta say, there's not too many people that call themselves socialists and supportive of the United States military. But continuing. Okay, so yeah, that's number one. If your investment style takes into consideration politics, and if Palantir's politics doesn't suit your investment style, then frankly you have to move on. They aren't going to change. Palantir is staunchly pro-US and pro-US allies, including Israel. Just, you need to know this going in. I don't want to steer you in the wrong direction if this is a concern for you. Now founded in 2003 by Alex Karp and Peter Thiel, Palantir has revolutionized how organizations harness and power data to drive decision making. Okay, so what is Palantir? No, it's not the Eye of Sauron. Although this is where Palantir derived its name, believe it or not. And much like in The Lord of the Rings, it also allows you, from a central location, to see everything in your business, more or less. There's often a lot of confusion about what Palantir does, specifically, and how it differentiates from its competitors, like Snowflake. Now, in simplest terms, Snowflake is a cloud data warehouse system. Snowflake is software that sits on top of the cloud like AWS, Azure, or Google Cloud. It is general purpose and can be used by many use cases. However, due to its general purpose nature, it requires data engineers and data analysts to get the most out of it via SQL commands. If I just said some words you don't understand, don't worry. That's as technical as I'll get in this video. Now Palantir is an operating system. No, it's not iOS for your phone. So what does that mean? Palantir's products are a vertically integrated solution that aggregates data from multiple disparate data sources and has software on top with different archetypes to use that data to provide insights and allow actions. Now these archetypes are industry or function specific. The system is not general purpose. Since it is archetype specific, you can get a working system up and running within a week. Now Palantir will give you a whole software stack in a week, what would normally take a company 6 months or more with a dedicated programming team. Now archetype, what the heck is that? Here's a quick example. Let's say your company is manufacturing widgets. Okay, so you have multiple suppliers, warehouses, manufacturing hubs, transportation, product moving around, the works. You can sort of see how it can be represented in this image, right? Now this image is from Foundry. What Palantir can do, and this is just one use case, is it can look out into the future and know if a supply shortage is coming up. It will simulate that and give you a warning. You can see this image in a few alerts here where it's been set up. It will give you various options to resolve the issue, such as switching to a different supplier. Now, Foundry has dozens upon dozens of these various structures, and it is actually growing in number dramatically. Now, these are models for energy, retail, hospital operations, supply chain, and more. Now, here's one that does carbon impact of shipping vessels. Oh, you want to see how large Palantir can scale? Here's an example of that. It can get pretty big. It can actually get to thousands of data sources inputting in data into it. It's massive. It is massive. Now here's an image Gotham, Palantir's other product. This is their government product. Now Palantir operates through two core segments, government solutions and commercial solutions. Now in the government sector, their software aids intelligence, defense, and law enforcement agencies in combating terrorism and cybersecurity threats. Meanwhile, the commercial realm, Palantir empowers enterprises across industries with advanced analytics tools to optimize operations and unlock new opportunities. Now, the government software is called Gotham. The commercial software, Foundry. Gotham incorporates data from satellites, security cameras, communications, everything, all in real time. Gotham plans the entire military operations and is indispensable for the military. In fact, Ukraine's using it. Now, Palantir is basically in a name the price situation with the US government. They are that important. Palantir was also used to manage the vaccine supply chain during the pandemic. Now, due to the scale of Palantir, and at its heart is aggregating data from many sources and providing insights into that, Palantir targets customers that have over $1 million of AI spend a year. Per year, $1 million. Their argument is, instead of hiring a programming team, use our product instead. We can hook you up within a week. Now, here is basically how AIP functions. This is a new product from Palantir within the last year or so. And what this does is it sits on top of your data. The source of truth is the data underneath. AIP can connect to Parquet files, Azure, Snowflake, Amazon's AWS, their S3 buckets, Google BigQuery, etc. As you can imagine, Foundry is ripe for generative AI integration, and that is where AIP comes into play. Palantir's artificial intelligence platform, AIP, is a platform that brings the power of generative AI to the entire organization. It combines machine learning technologies developed for industrial and military partners with the latest large language models. Basically, you can query your data using using a chatbot. AIP features and capabilities can be enabled in Foundry. AIP Assist is an LLM-powered support tool designed to help users navigate, understand, and generate value with the Palantir platform. Basically, this means you can query your data just by talking to it using human language. Now, from Palantir's most recent earnings report, they stated, launched just 5 months ago, AIP is already used by nearly 300 organizations across sectors ranging from energy to finance, hospitality, and healthcare. There's even a convention. AIPCon will feature more than 30 organizations showcasing how they use Palantir's new artificial intelligence platform to drive concrete business outcomes. And actually, as you can see, it's already happened, and you can go on YouTube and watch it. Okay, now here's the ace up Palantir's sleeve. 0 to use case in 5 days. Now bootcamp is a 5-day crash course training session. You go in knowing nothing, and in 5 days, you'll know how to build initial use cases using AIP and Foundry. Now this has dramatically shortened Palantir's sales cycle. It is the golden ticket to riches. On Palantir's latest earnings call, they stated, one bootcamp attendee remarked, "What your team did in just 2 days was incredible. We can already think of 100 use cases for this." While another said, "It seems there are endless solutions. It seems there's nothing Palantir cannot do." Now, when combining LLMs with Foundry through AIP, the ability to deploy use cases becomes much more widely accessible, so the addressable market expands considerably. We're seeing initial momentum as a result of that expansion, while also still being at the starting line in the journey to capture that market. In our U.S. commercial business, the expanding addressable market driven by AIP is propelling growth both through new customer acquisitions and expansions with existing customers. I've never before seen the level of customer enthusiasm and demand that we are currently seeing from AIP in the U.S. commercial. With regard to new customer acquisition, the expanding addressable market is reflected in the greater scale at the top of our sales funnel. And now we're doubling down on how we're converting bootcamps to enterprise deals. We're already seeing evidence of bootcamps helping to significantly compress sales cycles and accelerate the rate of new customer acquisition, which rose to 22% sequentially in the United States commercial in Q4. Sequentially. That's massive. We're also seeing a meaningful increase in our U.S. commercial TCV on a dollar-weighted duration basis, which is up 107% year over year and 42% sequentially. We've signed a multitude of U.S. commercial deals last quarter. Moats time. Oh, by the way, can you see my cat? Now, when Palantir gets ingrained into a business, it is usually there to stay, as the business sees the benefits almost immediately. In fact, over time, businesses usually increase their spend on Palantir as they purchase more archetypes and expand. Net dollar retention was 107% in Q3 2023. Palantir doesn't lose customers. Existing customers buy more. Alright, so numbers time. I'm going to turn off my face so you can see what's really important. So yeah, enough of the overview. Time for the financials. After financials will be my DCF valuation. It is a can't miss. Now, Palantir's financial performance has been nothing short of incredible and record-breaking in the latest quarter, reflecting its successful growth strategy and market demand in artificial intelligence. U.S. commercial revenue is up 70% year over year. U.S. commercial customer count is up 55%. 130 U.S. commercial deals closed. Palantir is firing on all cylinders in the United States. Revenue, $608 million, up 20%. Adjusted income from operations, up 34%. Free cash flow is up 50%. Now, this is the fourth consecutive quarter of GAAP profitability. GAAP EPS of 4 cents. Palantir will be eligible to join the S&P 500 soon. On a GAAP basis, revenue growth is strong and steady. After many years in the red, operating income recently achieved profitability. Now, free cash flow is improving drastically after the 2022 declines. Now, the key metric here is that the company was free cash flow positive for quite a while before becoming net income positive. From a free cash flow basis, Palantir has been in a healthy state since the IPO. Now, as an aside, the IPO was a direct listing, meaning that Palantir did not sell a stake in the company to IPO. Instead of raising money in a stock sale, they allowed existing investors to sell shares. Now, this is crazy. Something special is happening here. Do you see the difference between assets and liabilities? That is very rare and very good for, well, any company. The ratio between stockholders' equity and assets is a marvel. 103 deals closed in Q4 of at least $1 million, 37 of which were over $5 million. 21 were above $10 million. Q1 expectations, $612 to $616 million in revenue, about $200 million in adjusted income from operations. Now for the full year, adjusted free cash flow is going to be between $800 million and $1 billion. Palantir prints cash. Now, do you notice something missing here? I'll give you 5 seconds. Let's see if you can find it. It's debt. Palantir literally has zero debt. And equity increased $900 million year over year. Their balance sheet is insane and extremely strong. Now, Palantir, Wall Street rates Palantir a hold with a price target of $20.02. Now, in today's video, I will give you my conservative case for Palantir. For my base or optimistic cases, well, they're up on my Patreon. Check out my Patreon. You'll get access to all of my investment reports and valuation spreadsheets. I've got Tesla. I've got Nvidia. I've got AMD. I've got Microsoft. I've got Palantir, and many others. You will also get exclusive access to my Patreon portfolio. Every transaction I make will be posted on Patreon as it happens. You can follow every move I make in this account. Watch in real time as I grow this into a multi-million-dollar portfolio. You will never find a better deal. Oh, and guess what? There's a 7-day free trial. Don't like my content? Then you get 7 days for free anyway. There is no reason not to join the club. The link is in the description. Okay, so here's Palantir's last 5-year numbers. Revenue growth has been quite nice. Now, this isn't the whole picture though. We need to dig deeper. To begin, let's understand the concept of DCF valuation. DCF is a financial model that estimates the intrinsic value of a company by discounting its future cash flows to the present value. Now, DCF is a critical tool for investors as it helps them make informed decisions on whether a stock is overvalued or undervalued. Now, the present value of expected future cash flows is arrived at by using a projected discount rate. The WACC is commonly used to calculate this discount rate. Okay, so DCFs are commonly used by investors to pick stocks. Now, here are my conservative projections for Palantir's commercial segment. I have it growing 40% in 2024, slowing to 6.4% in 2023. And yeah, I like doing 10-year projections. For the government segment, I have it growing from 9.6% in 2024, slowing to 4.8% in 2033. Okay, so I feel these may be too conservative on Palantir's numbers for both segments. Hence this being my conservative case. Now, if Palantir shows more outstanding quarters, I will adjust accordingly. The whack-a-mole charts. I'm issuing Palantir an ultra-high discount rate of 16.8% due to a combination of today's high interest rates and their volatility. Now, I'll just include charts for my conservative case. I estimate that 2024 will come in at 23.3% growth, with growth growing to 32% next year, gradually dropping to 6%. Now, EBITDA margin remains high due to AI demand elevating prices. Now, I'm actually using a WACC of 8% since the previous number was just way too high, a perpetual growth rate of 3%. This gives us an implied stock price of $16.24. The multiple valuation coming in at $18.29 at a multiple of 30. Okay, so what I do is I average the perpetual and multiple valuations to come up with the implied share price. Now here's the conservative case. The implied share price is $17.27. Again, if you want to see my base or optimistic cases, check out my Patreon. It is a can't miss. Palantir has a unique and differentiated product offering, a loyal and diversified customer base, and a large and growing addressable market. Palantir has a strong and visionary leadership team led by co-founder and CEO Alex Karp, who has a large stake in the company. However, Palantir also faces some challenges and uncertainties, such as regulatory and legal issues, privacy and ethical concerns, customer concentration and retention risks, and competitive pressures. Palantir also has a complex and unconventional governance structure, which gives the founders and insiders disproportionate voting power and control over the company. Therefore, investing in Palantir is not without risks, and the stock price may be volatile and unpredictable. Palantir's valuation may change significantly, depending on market sentiment, the company's performance, and industry trends. As always, investors should do their own research and due diligence before making any investment decisions. Thank you for watching, and I'll see you in the next one.